is up? Welcome back to my channel. In today's video, I'm going to be talking about how to analyze a stock to make sure it's worth buying, to make sure it's a good investment. It's kind of like investing for beginners, but to be honest with you, I think especially now with social media and kind of how hot the stock market is and investing and financial freedom and retiring early and all that crap, I think it's extremely important whether you're a beginner, intermediate, even advanced, to kind of go back to these basics, because it's very easy to get swallowed up in the hype of a stock. That stock price then drives up. You think, oh my god, it's a great investment, company's worth it, but really that stock price is just a reflection of the noise and the hype around it. So it is very important to remember your basics, to look at fundamentals, to analyze, to pick a good investment. And in this video, I'm gonna teach you how to do that, or at least the most important things I think you should do to analyze a stock when you're investing in it. So let's get it. But you already know, if you are new here, what is up? My name is Nikki, and it would mean the absolute world to me if you would consider subscribing by hitting the NB in the bottom corner or the red subscribe button down underneath the video below. Join the crew, join the journey. On this channel, I post 2 videos a week all about money, investing, stocks, dividend investing, long-term investing, finance, side hustles, all that good shit. I just like making money and having a good ass time. So if you are into that, or if you enjoy hanging out with me about as much as I love hanging out with each and every single one of you, please consider subscribing. Now, to be honest with you guys, the long-term dividend investing, long-term portfolio, long-term strategy is so damn crucial, okay? I have been working with some day trading, option trading, swing trading. I've had days where I'm making 90 bucks, 56 bucks, 100 bucks. Then I had a day like today where your girl lost $292 in the first 30 minutes of the market. Been in a funk since then, but then I open up my Robinhood portfolio. I look at that long-term dividend portfolio I got going on, and I say, you know what? We're gonna be okay, because this ain't being touched. This is my baby. This is my pride and joy, and I will never touch this. And then the trading one is kind of for fun, but it ain't fun when you're losing thousands. I think I'm down like $1,000 at this point overall, which is just not the damn business. So it is very crucial, hear me out here, that y'all get a long-term portfolio going, okay? Okay, so how do we analyze a stock that's worth investing into? How do we know if it's gonna be a good investment? How do we know if it's worth buying? How do we know anything? And your girl's gonna tell you 5 things that I currently do when I look for something. And I believe the 5th one is the biggest one that really nobody emphasizes a ton. I mean, they do, but not a lot. So make sure you stay tuned for that all the way through the video, and let's jump into number 1. And just one more thing, really quick, because you know I always do this to y'all, but long-term portfolio, okay? When I say long-term, I'm not talking about 1, 2, 3, honestly, even up to 5 years. I'm talking about like 10, 15, 20, 25, shit, if you got the time, 30 years, okay? But I'm talking at least 10 years. Remember that, because I think any investment 1 to 3 years, I mean, it's like midterm to me, okay? It ain't short term, it ain't a week or 2 or a month, but it's not long term. It's not like I am going to want to live off of that stock when I retire. So just to clarify, when I say long term, I'm thinking 10 years plus. And yes, I've mentioned in videos before, absolutely nobody, this many people, know what's going to happen in 10, 20, 30 years with the stock market. But given the history of America, the economy, the markets, I think it's safe to say it's gonna be all right. But this video is really just entertainment purpose only. You already know that. So the first thing you guys need to look for in a long-term investment is profitability. You want to make sure this damn company is making money. So I specifically look at the return on capital, which means you're looking at the net income over the invested capital. So essentially what that means is, if you have a company and your company makes $1 million in a year, but you put $5 million into the business, that's not bad maybe for a year. If you've been around a while, whatever, you have to put money back into your business to make more money for your business. But if you have year after year after year of basically that percentage being low, I don't think it's a great long term for you. And what I look for in these percentages, I look for anything, and this might sound low, but I look for anything around 20, 25% and above. Because I want a company that's able to take a little bit of money and use that money so damn wisely that they make a lot of money. I don't want a a company that has to use a ton of money to get their company profitable. That's just not something for me long term. Now, some of you may come at me like, oh, Nikki, you have Ajax in your portfolio and they're not. Okay, I get that, I understand that, but that, like I said 1,000 times, is something that I put in my portfolio before I had any clue of what I was doing. So now, from this day forward, and actually days before that, I always want to make sure it's profitable if I'm really looking to hold it for 10 plus years. Just so you guys know, like Coca-Cola, I think you've heard of them. I believe that their percentage is around like 20 or 30% themselves. That is salt. I mean, Coca-Cola is a brand of brands, okay? Like, we know Coca-Cola's been here forever. It's probably gonna be here forever. Anything under 20, I'm not gonna want to heavily invest into long term. That's just me, I don't know, but let's move on to the second thing I want y'all to do. The next thing is debt. Now, debt's like a hot stuff. I mean, there is definitely good debt, like real estate, okay? And there is bad debt, like credit cards. Debt within a company, honestly, is not that bad. The key factor here is we wanna make sure that they have enough cash on hand to be paying off the interest and the principal every single month, whenever the bills due, however they got it working out. But we wanna make sure that they have enough cash on hand to be paying down the principal and interest. So if you take the company's long-term debt and you divide it by the operating cash flow, that's going to give you a number. And that number is how many years it would take that company to pay off their debt. So for me, I really like that number to be 5 or less would be great. 7, 8 or less, whatever. Anything over that is just, I don't know. It just long-term doesn't make sense to me. I just want to make sure that they have enough cash on hand to make their minimum payments, to not get in trouble with debt. Because I'm pretty sure we can all agree that we've all at one point in our life racked up a damn credit card bill, your girl included. The interest you pay on that, the hole you can get into, it's dirty. Investment that I'm going to make takes that very seriously and does not get themselves in a hole, because long term, if you keep digging a hole, you just digging deeper down into the ground. You're not coming up out of that. Third reason, which is something I have said many times I absolutely love, I always ask you guys to comment it down below. So that is going to be a wide ass moat. You guys already know I love a wide moat, but really, what the heck is a wide moat besides something so damn beautiful? Essentially what a wide moat is I look at it as literally like a moat. If you have a castle, there's a moat around it. Depending on how wide that moat is, gives you a little bit sense of security from oncoming enemies, aka in the economy, in the business world, those are called competitors, competition, other businesses in your industry. Now, there are different kinds of moats. Look here, just to keep it simple, like if they have history, okay, brand history, company history, they've been around a very long time, I consider that a moat. If they have different brands that they own, like tons of different brands, like Pepsi, for example, has snacks and beverages and energy drinks, and like they have a plethora, like J&J has J&J is like a healthcare ETF. They got so many damn brands. That's a wide moat. Essentially, if you're looking at something long term, you want to make sure these companies have a lot of cushion and a lot of protection around them to protect them from oncoming competitors. Because if you have a brand new startup healthcare company, you think they're gonna go head and head with J&J? No, J&J for sure is gonna be there. Just to run off the healthcare part here. So say J&J has a patent on a specific drug. That keeps competitors away from that. If you have a patent on something, on a product, on a service, on a whatever, it gives you the right to that and only you. You get what I'm saying here? Does this make any damn sense, okay? We love a wide damn moat. So if you are this far in the video, just comment down below wide moat. Let's go ahead and move on to the next thing. The next little bit of business here that you're gonna wanna focus on is fair value and PE ratio. Now, I will say, I think if you are sincerely going to be a long-term investor, you need to be buying in consistently. I think you need to maybe wait for a red day in that stock to purchase over, you know, every single month. So fair value obviously is going to change in time, and there's a lot of emphasis about average cost down. Okay, so you want to get your average cost per share down, which is totally great and is totally relevant, but as time goes on, your average cost is going to rise. In 30 years, your average cost of Coca-Cola is going to be a lot higher than it is right now. Don't worry so much on, oh my god, I need the share price to come down below my average so I can average down. With time, everything's going to continue to grow, so don't get so caught up in that. But it is very important to be paying the fair value estimated price of that stock when you're trying to pull the trigger on it every month throughout the years. So you can use a lot of different sources to find the fair value. I pretty much quickly just use my Robinhood Gold on Morningstar, and I kind of see where that's at, and I kind of just run with that because, like I said, long term, I'm just going to be continuing to adding. It doesn't really matter if I buy on pullback days, on red days for that specific stock and company. I'm probably going to be fine. I just use Morningstar. I think Yahoo Finance has estimates, probably Bloomberg, probably Zynga, Finva. I mean, there's so many, you could probably find a fair estimate for a stock, okay? And then the next thing is the PE ratio. Now, the PE ratio is kind of hit or miss here. Some people really like it, some people really hate it. I tend to like it for my long-term dividend investment. So if a PE ratio, I don't really like long-term investments that pay dividends to be higher than a 20 or 25. I just don't like that. If I'm looking at a spec, at a growth stock that's just growing insane and their PE is like 40 or 50, maybe. If I really believe in it and I'm really behind it, maybe. Anything over 50, probably not, unless it's super spec and I'm just taking a gamble and I don't really care if I lose that money. But this video is specifically about good investments, not good trades or good whatever. So it's under 20, usually it's undervalued, so it might actually be under the fair value. Anything higher than that, two things, I feel like it either shows that it's overvalued or it shows that there's excitement and people think it actually can grow more. So that's where you kind of get in the hit or miss. Alright guys, so the last and final thing that I think is crucial when you're analyzing a stock to buy and invest in, and I think the most important, and to be honest, it's just so damn simple, but hey, it is what it is, and it's what I think. So if you are getting value out of this video, would you mind helping a girl out and just smashing the damn thumbs up button? It truly helps me out a ton. It honestly means more to me than you know. And the final thing I think you're really gonna want to evaluate and take a deep dive into is if you are a consumer, a believer, and an observer, and I'll kind of touch about that in here in a second. So it's pretty simple, but I think it's very overlooked. One, be a consumer. Do you use the product? Do you use the service? Pretty simple. I mean, for me, Nike. I wear a lot of Nike. Pepsi. I love to drink Diet Pepsi and have Doritos. J&J. I like to put lotion on after the shower. Do you get where I'm going with this? Peloton. I use it almost every day. I'm a consumer of the good or the service, and I have been for a long time. That's a key. Automatically falls into believer. Obviously, if you're consuming the good, you believe in the good, in the service, in the company. Do I believe in Pepsi and Doritos being healthy for you? No. Do I believe that it tastes good? Hell yeah, okay. Do I believe I need that once in a while to treat my damn self? Yes, I do. But then do I also believe in Peloton and working out and staying healthy and making sure that the insides of me are working just fine? Yes, I do. There is a lot to be said about being a consumer and believing in the product, service, or business. For all my Tesla fans out there, you guys love it, okay? You love Elon, you love freaking electric cars, you believe in that kind of business, you believe that Tesla's gonna take over the electricity space. You think we're getting rid of oil and gas and electric cars will run the world, and they're gonna get into other things like space, and you just fully believe in Tesla and Elon, and you're on the train, baby. And the last little thing that I mentioned is be an observer of the economy, meaning what are people talking about? When you go to the grocery store, do you see a certain brand of water that's more prevalent, more empty on the shelf than the others? Do you see a product or a service that's getting a lot of news and you're noticing a lot of people talking about a certain thing? At that point, maybe you look into it, see if it's even publicly traded, see how old it is, run all those other things I just mentioned, and go from there. Especially now with social media. I mean, I see ads for things and people talking about things and now reviewing things and now using things more than I have ever in my life. Don't necessarily buy it, but maybe that's a key thing to look into to further deep dive into the business to see if it would be worth it long term. Believe in it and be aware of it. Like, word of mouth is still the #1 marketing tool for any business. If I go out and I use a product, I mean, the first thing that comes to my brain, I think it's like truffle hot sauce. I see it on Instagram all the damn time. It's like a cool little like hot sauce duties like dance around, whatever, okay, whatever, I don't know. But I see it all the time and I'm like, dang, you know what? That might be good. And then I see reviews online of people trying it and they like it. So maybe one day I go out and I buy a bottle. And I'm like, damn, this stuff is good. So then I tell my best friend like, hey, you have got to try this. She goes out, she tries, hey, you have got to try this. It is so good. Every single person who tells another person is now a consumer and a marketing agent for that company. So you gotta pay attention to trends like that. And yes, some of them are fads. Some go like this and some come like this. But if you're noticing something early enough and you do the research and you put in the time, and if it is going to be publicly traded or it already is publicly traded, boom, baby. Run the financials, run these other things I mentioned, and you might have a good long-term investment. So you guys, those are really my 5 kind of basic things that I do when I'm looking for something long-term. So let me know in the comments below if you agree, if you disagree, and if you are watching this and you are not still subscribed, I don't know what you're doing. Please join the crew, hit the red button. We would love to have you. And if you're this far and you got some value out of this and I earned the damn thumbs up, can you please smash the dang thumbs up? And you already know, if you're hearing my voice, you are the real MVP. Come here, you know I love you. And like always, you guys, enjoy the journey, whatever your journey is, and always remember to do what sets your hearts on fire. And I will catch y'all in my next video. Bye, guys.